Hello, YouTube. The stock market is just doing it or going risk on. We gap and goad, leaving a massive hole in the chart. And we can also note that we are currently repeating the pattern we talked about before, where we go up and close over the candle highs, which we did again today. There's a lot of risk appetite out there. Looking at the stocks you would expect to see if the Fed is truly pausing, ARK is up by 8.4% today. So I think Jerome Powell just gave us the all clear. He said, thumbs up, ready to go higher, hold my beer, and let's see what stocks do. Well, let's read this headline because yesterday people gave me a hard time about what Jerome said. This seems like a pretty easy and simple headline to read here. Powell hints Fed is done with with hikes. In pivot cheered by the markets. There we go. He downplayed the previous projections for more tightening, or that SEP from September. We're now sitting at about 80% chance there are no hikes. And like we talked about, there's actually some cuts getting priced in. The reason why this is so important is because we note that we actually got some bad news today. And the bad news is actually from Apple. So Apple closed the day up by about 2%. And then they reported earnings, which is why the video is a little bit later today. And Apple's revenue drops to the lowest level, I think, since 2001. They've been changing the headline. Earlier, this is what I had as the headline. So they've been changing it as the story unfolds here, but this is what I had earlier. Apple posts fourth straight sales drop, longest slump since 2001. What's the stock doing in after hours? They're probably on the conference call right now, so things can change, but let's look here and see it post-market. Apple's down by 1%, not even. You would not even know they reported earnings, but that headline is not good. This one does not get me excited. Right, revenue drops for the fourth quarter in a row, worse since 2001. And I believe that is why we still have a lot of fear in the market. So if we have a lot of fear in the market, but things are getting de-risked and we're now noticing that we're probably closer to the end than not, what do we do? Well, that's what we want to go through today. So hopefully you enjoyed today's show. I'm going to ask you for a huge, huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. And I'll thank you ahead of time because I'm going to be back on Tuesday for regular scheduled uploads. I'll be away between now and Monday. I will make an effort to upload content to our group, meaning our private group. If you want to join us, no time like the present to take advantage of the 14-day free trial, but I'll leave it there. So Jerome, I think, is giving us a thumbs up. But if you notice what he was saying yesterday, he kind of gave himself some optionality where he said, we're ready, willing, and able to hike and blah, blah, blah. Why did he say that? Well, because he didn't want this to happen. If stocks go up and bonds go down, which they did, we can note that the DXY is down by about 0.5% today, gap down and flush. VIX is down to 15, down another 7%. The 10-year note has been pretty stubborn, but that's just because I'm recording this as of the new candle opening here. We did have a down day, and we're now down almost 10% off the highs. So this is like really good. There is a little bit of a warning sign, and the warning signs I talked about are that fear and greed is not taking higher with a 2% day like WTF. Is the market broken? Or are bears feeling a lot of conviction? So what we talked about before too was the short sellers actually going net long, and they did. So because I won't be here tomorrow for the Friday close, I would like for you to pay attention to this because they finally went net long for the first time going all the way back to June of 2022. Man, that's like a year and a half. So if that's the case, they're probably going to stay net long, which means markets are probably going to keep going higher. They want to get their bonuses going into the end of the year. And if we look here at the S&P, it is currently up by about 12.64%. If you're getting paid to manage money, you're supposed to beat this number. What does that mean? You better make sure you're long. Going short means that your people are not going to be happy when they get the report card. Right now, the Nasdaq is up by a sizzling 36.5%. What does that mean? There's likely going to be some performance chasing into the end of the year. That is my belief. I also shared a couple tweets, which I think simplify the story very easily, and they acted as the gateway for the bulls. Let's go and have a look at them here. All right, what happened here? I was talking about 35. Let me actually just check the tweet. 35796 is the gateway for the bulls. Why? It looks like either a cup with a handle, maybe time for some coffee, or maybe an inverse head and shoulders. And what happened today? Well, we gapped way over that and pumped, baby. We went up. We went up. We went up. Looking here at the S&P, it's 429.14, which corresponds with our low going back to here. Again, shoulder, shoulder, head, or a big cup with a handle. So where did the S&P close? Closed over it, 430.76. I was actually a little bit surprised by how high we got. There we go. All right, moving forward. So if we think about the market currently giving us a gateway on a monthly chart, what does that mean? It means that's a high time frame chart. It's only November 2nd. We better make sure we're patient and make sure we understand that there is no confirmation yet. What I want to do now is I like to go through a couple of scenarios that I laid out on the weekend to try to give a quick update here. So the first thing I'd like to talk about, and let me just make sure that I don't have anything else here. If we go back to a 1 week, it should be bright green. Yes, it is. Go back 1 month. Here's where it's mixed. So as we look at the charts, notably QQQ and SPY, this is what we want to try to understand. Where's the strength? Where's the weakness? And what happens at the index level? Then we'll come back and look at these data points because we do have a big one coming out tomorrow. Unemployment rate, non-farm payroll. And I alluded to there potentially being a gap fill. So I'm going to go through the two scenarios now because, like I said, I'm going to be back on Tuesday. And again, market can go up, down, or flat, as we say every day. So here is scenario one. Scenario one is that we're going to close over the candle high, close over the candle high, close over the candle high, close over the candle high. What does that mean? Tomorrow we have to be green. We're closing at the high of the day, which means we have to close green tomorrow. If that happens, then the weekly chart is going to be pretty bull. Ironically, we went from the 50-yard line to the 61% yard line, or the Fibonacci areas like that. In 1 week, we went from 414 to 430, and now we're even over 430. So that means we're going to be getting a pretty bullish week. We got a higher low, we got a higher high, and we're closing over the candle high. The closer we close to the high of the week just means that we're likely going to get upside pressure, which should follow through into next week. Here's the caveat. If we do get a sell and we don't defend the low of the day today at 426.56, I would expect that this is what we were looking for on RSP, where we form what? A high, lower high, lower high. And we're not going to cross over that 50-day moving average, which means that would be it. We're going to go for a sell. And we're going to look at Bitcoin as a clue for that because Bitcoin was the clue that I called out as the leading indicator. And it actually gave us a failed daily and failed weekly breakout today. Let's have a quick look at that to see if we understand what it's telling us. So here we have a higher low, a higher high, but it's actually a failed breakout. We made a new high and we're not set to close over it, which means we're now consolidating, but the bulls failed to hold the breakout. If you look at the weekly chart here too now, last week's high is 35,157. We're currently below that at 34,900. So failed weekly breakout and failed daily breakout. What would that mean for SPY? Well, it would not mean something good. It means we're probably going to be going down. So what would that mean? Maybe we get a move higher, tag that 50 DMA, and then we come back down. What does that mean? Going back to a red on the day or falling back below 430.92. What I want to do now is actually pull up that seasonality chart because I have something that just came to my mind because we've been talking about this. So let's go here. We talked about this. It has to be only up from here. So up, then up more. Okay, that's what we talked about. High, lower high, lower high, right? We're looking at the pattern right here. So what we need to do is actually form that flag. That would likely be a failed break because we're going to be closing lower. And then boom, we close over it. So if tomorrow's Friday, that would mean that we get a daily fail breakout, and then we have to reset and reload to close higher next week over that relative high. What's that relative high? It's right here, 438.14. So if we're looking for this, if we close the weekly there, I think I kind of told you the story now. I'm going to leave it there. So what this means is, second thing I want to note is that if we're gapping going, we have to be mindful of what actually happened. If we look here on the weekly chart, we had a gap down pump up, which is what I thought was happening over here. And clearly I was a little bit early, but being early is just like being wrong, right? You're probably learning that now, right? Okay, well, back in March, that was the bottom. What was the percent rip from here? Well, it's pretty big. We went up 20%. So what was the clue on the daily chart? I'll show you because it's pretty obvious. All right, let's delete everything again. Let's grab our paintbrush. What's that right there? Oh, that's a gap. Yep. Then we leave another gap, and then we'll leave another one, and then we leave one more. So we'll leave 4 gaps as we're going higher. And everyone's like, oh my God, we have to go down and fill the gap. All gaps get filled. And the saying is that all gaps get filled, but they get filled in time. So this could be the first gap. And it could not be the first gap. So if it's the first gap and we're going to get over the 50, then the 50 acts as support. Remembering that we're looking for a bit of a flag right here, right? A little bit of a flag, and then we advance into next week. So if we were to hit the 50 and then back off and get a daily fail breakout, that's what I would be looking for. If we get over the 50, I would look for it to act as support. Why? That's just how it works. Please also note that if we get a second daily candle close over the 200 DMA, whether it's a failed break or whether it passes, it doesn't really matter for me. It means that we're claiming the long-term price, and that long-term price should now act as support. It should be double support because we have the 200 DMA, but we also have a gap fill here, which would correspond with that average at roughly 423, 423.50 to be precise. So what's the 200 MA? 423.53. We should at least get a dead cat bounce if we hit that area. That's where we can assess the health. Do we reclaim 426.53? 426.56, which is the low from the day today. So if we come down, fill the gap, and then fail to recapture the low, it means we're not doing this. We're not forming a low, higher low, higher low, high, higher high, higher high, because we got to take out the high from September. Remember, that's like pretty high from here. Where do we got to go? Oh boy, right? If we go here to our monthly chart, we got to go to 454. We're getting a lot closer, but man, we still got work to do. If you look over here at QQQ, what gets interesting is that we're actually right up here against our 50-day moving average. We got pretty close to hitting it. And I think Apple's probably dragging us down a little bit now. Let's have a look. Yeah, Apple's down 3-4% now. So that's what's dragging us lower right now. And the futes are closed. So the net reaction is that the S&P is down by 70 cents. So again, please take what I said about Apple negative news not taking us down with a grain of salt, because I'm not listening to the conference call. I'm not exactly sure what they're doing. Okay, so with that in mind, we know the bull story. I went extensively over the bear story this weekend, and the catalyst for tomorrow. Again, are we going to gap up? Are we going to gap down? Are we going to get a positive reaction to good news, a negative reaction to good news? That's where I want you to pay attention to whether or not the number is red or green. But then more importantly, what is the reaction? Is good news good? Is good news bad? What's the reaction? Based on the chart, this is a very important number. The unemployment rate, the non-farm payroll, average hourly earnings, all that stuff is important. All right. So the part that's missing for me is the fear and greed, as I alluded to before. So if we go back to Bitcoin for one moment, this is the asset class which has really been leading. We have a golden cross forming here, which means that maybe we're currently battling like Bitcoin is not, right? Bitcoin has just been advancing and advancing. This most recent move just has my radar buzzing. It does not mean we have to go lower or this is exactly what I'm looking for. I could just see a perfect scenario where they don't want to pay out because, oh boy, a 5% rally on the S&P, that is a massive move. 4.89 on S&P week to date. Nasdaq's up by 5.25. So wow, we're almost all the way back up here to our upper channel. That is pretty bullish. Last thing I want to go through here is just doing a quick check-in, and I want to go through what we had before, which was our above or below 50-day moving average list to see whether or not the rest of the world is participating, because you might be a little bit surprised. So Microsoft is actually back above its 2021 high, which means it's almost back in blue skies, back above 349.67 or about another $1.50. And it's there. That's our red line. It's last year's high. Microsoft looked good. Microsoft looks strong. It wants to lead the charge higher. All right, moving on. Tesla. Tesla's clearly had a big move lower. It's trying to hook or curl up. It took out its relative low. It's right around the 200 DMA. I would want to see it slingshot all the way back up to the 50 to give me some confidence that this company is not at least going to hurt the market. It's not going to be a drag. NVIDIA, pretty close to reclaiming its 50 DMA, but not quite there yet. Volume's also a little bit light on the sell-off after the first day, so I don't see anything terrible there. Bitcoin is way over both averages. If we move forward to Apple, Apple actually closed above both, but now in after hours, we're getting a negative 4% move, which was part of what I thought could be the negative catalyst. I was a little bit bearish going into the gap up today. So here we are. We're going to find out what the largest stock is telling us for guidance. Again, declining for 4 quarters in a row to the worst level back to 2001. Not something that gets me excited. SMH tagged the 50 DMA today. So we're going to be looking for chips to lead if we're looking for more upside imminently. Moving forward to QQQ, we just talked about it, tagged the 50. I'd like to see 2 daily closes over it. Otherwise, we're looking for a gap fill here. All right, moving forward, we got SPY. Let's skip it. China's moving. It's up 1% today, but man, there's a lot of work to do. We're below both lines. Blue is 50, black is 200. Oh my goodness, ARK up by 8.4%. This to me is a garbage trade that's on. Some of the names reported like Palantir and a few others, but if bonds are going down, that means that unprofitable growth should be booming, and that's exactly what we see. Below both averages. DAX trying to make a move back up to the 50. Let's see what it does. Gap and go. Canada, gap and go. 3%. That is a crush. That's a huge move. Back above the 50, looking better. Emerging markets. Well, it's gapping up and going, but it's not above the 50 MA, so watching that one closely. Nikkei, right? Japan is king, and Warren Buffett knows it. Back above the 50, bouncing off the 200. Nice. Ethereum basing over the 200 after claiming the 50. And that's it. So a lot of stocks look pretty strong here. What I want to leave you with is the weekend video over here on the left-hand side. And like I said, I will be back on Tuesday. So please rewatch the video if you want to know more. If not, I will be back for a regular upload at the end of day on Tuesday. Thank you so much for your patience. I wish you all the best of luck while I'm gone. Thank you again.